I was watching the Dow the other day and it dropped over 300 points. And why did it drop? The fear that interest rates are going to go up. So this big sell-off because of worry about interest rates. Well, obviously the people doing all the selling, the institutions, have no idea of why they're selling. And I'll try to explain it this way. In order for interest rates to go up, well, let's go back a little further. Our knowledge of the rise of interest rates, our only one point of knowledge is the period between roughly 1970 and 1980, when interest rates went up like this. That's our only knowledge base for interest rates. So you have to work around that piece of information. Otherwise, you're just dreaming about where interest rates are going. And that's what I think these institutions are doing. They're just dreaming this up because they don't have the experience. But why did interest rates go up in that period from 1970 and 1980? There's only one reason why the interest rates went up. That's because of massive buying, continuous buying for 10 years, the buying of houses. Now that's a lot of money that was borrowed. You know, it's not like people went out with their credit cards and bought a shirt or a television or a refrigerator, and that would force interest rates up. No, buying a house, a massive expenditure. And most houses were financed for 20% or less down payment. That means 80 to 90% of the house was borrowed money. Well, when you have this massive borrowing, huge borrowing going on for 10 years, of course, the interest rates went up. So, I mean, the basis was like 4%, and they ended up about 15% before it crashed. So now getting back to today, investors are worried that interest rates are going to go up, and then they're going to destroy their stock portfolios. So get out of the stock market. But what are the chances of interest rates going up again? Do we have a lot of house buying where mortgages are being given? Everything I read is that people are buying less houses. So housing is not going to drive interest rates up. Or maybe wages are going to drive interest rates up, which they've never historically done before. But are wages that good? Are wages increasing that much where it's going to drive interest rates up? No. Housing isn't going to drive interest rates up, and wages aren't going to drive interest rates up. So you know what the conclusion is? Interest rates aren't going to go up. If they go up, it's going to be artificially set by the government, but that won't be supportable. And I want to make you one other point. That period between 1970 and 1980, when interest rates rose, the stock market, the Dow didn't decline through those 10-year period, 1970, 1980. The Dow just leveled off. Just stayed like this for 10 years. So these investors worry that they're going to lose all their money in the stock market. Historically, it didn't happen. The market just stayed the same. And it would give you, as an investor, a chance to start moving money out of stocks, which aren't declining if that happened. They won't decline, but start moving it into interest rate instruments. So this whole panic about interest rates might rise it's nonsense. is based on nothing. There's only one thing that 360 some point sell-off in the Dow over worry of interest rates, only based on one thing. Fear. Baseless fear. With no knowledge behind it. So that's my idea about interest rates. Take a look at it for yourself.